Hey, this is Jon Southurst, Bitsonline.com, where cryptocurrency and technology media meet the future. I'm sitting here with Christopher Kaelin, and he's with a company called RDS Data Systems. Now, RDS Data Systems is not a blockchain company. Is that right?
No, we're not. So
why am I sitting here with you now?
So what we've done is we've done some experimentation in the blockchain space, particularly concerning proof of presence, using geographical data and storing that inside the blockchain. What we are, to give you some background information, is we are a geospatial data analytics firm. So what that means is we take data from disparate sources. It could be private data that a company provides or public data, and we mix and match that together to provide geographical insights. Like, for example, if a hospital network wants to open up a new clinic, we're able to leverage both private and public data in order to determine where they should open their new clinic in order to maximize their ROI. Now, where this applies to blockchain is like any other industry. We are looking at blockchain technologies to possibly re-engineer or improve existing systems in existing fields such as the geospatial field. What we found so far is that there is a considerable amount of projects and technologies out there that try to kind of wedge it in. And that's kind of where we become a little hesitant, because it has to make sense.
Right. So I think a lot of the exhibitors here are just taking anything they want and putting it on the blockchain.
Yes.
You're there as the voice of reason.
That's right.
To ask them, like, do you really need a blockchain?
Do you need a blockchain? Yeah. There's a lot of instances where it just doesn't make much sense over traditional technologies. Geospatial is kind of one of those fields where, through our experimentation, we're not completely sure whether or not it makes sense, given SQL Server's GeoPoint functionality and how you can calculate distance between items. But there are some instances, like in digital payments and stuff to that effect, and the compliance area, to which it does make a lot of sense.
Right.
Our backgrounds is mainly from the mortgage industry. My business partner has been in the mortgage industry for 12 years, and he's actually built LMS systems from the ground up, which is loan management systems. So in some instances, like mortgage chain of custody, where you can validate that documents haven't changed from lender to lender, it actually makes a lot of sense to do blockchain. But stuff like ShoeCoin might not make so much sense.
Is that a real thing?
I heard about it.
Oh, man.
I mean, I don't know how real it is, but to use an example, that's a pretty damn good one.
Right. Hang on, you said he's been in the mortgage industry for 12 years, is that
12
right?
12 years.
That would have been around 2006.
2006.
That's a pretty rough time to start in the mortgage industry.
Yeah, and one of the reasons why we hooked up was he built a LMS platform that had a rules-driven interface to where you can essentially customize the underwriting and mortgage review process for any industry. That was before some of the big names like Encompass and some of the major players came out. So our roots are deeply ingrained in traditional industries and traditional technologies, which gives us a unique perspective, like you said.
Okay, so this is the North American Bitcoin conference.
That's right.
And it's got a reputation for being the place where all of the the Bitcoin hodlers come along and talk about being a Bitcoin hodler. So what made you decide to come here and talk about blockchain in general?
Mainly because I started out investing in 2015. So that was before the Ethereum boom. That was before the Bitcoin boom.
Yeah.
Bitcoin was around maybe $600 at the time. Ethereum was at $5 when I bought into it.
$5 is in $5.
$5. So what happened was, at the time I was looking at projects like Monero and some of the potential that they have. Monero is one of my personal favorites because of the anonymity that it provides. But that's really where I got my start, my interest. That's what introduced me into blockchain, was really the profit that could be made off of investing.
Funny, that's exactly what got a lot of people into blockchain.
Yeah. So then you start thinking, what is blockchain? What is driving all this financial flow of assets? What is driving the earnings that I'm getting? And that's really drew us to where we are today. It is a transformative technology for certain uses.
Right.
But to old school skeptics, I should say, that's really why we're here. It's a discovery. It's an era of discovery for those of us who've been holdouts.
Certainly is. Yeah, I'm still discovering it myself.
Yeah.
But when you talk about the blockchain, and when anyone talks about the blockchain, which blockchain are they talking about? Because I don't think they're all the same.
They're not. It really depends on what the blockchain technology was designed for,
Right.
and what its purpose was, and how in line the development team is to fulfilling that overall vision. So if you take a map of all these ideas that you have, or a picture of all these ideas that you have, and you take a dart and throw it at it, there's probably a blockchain out there that can best fit what you're trying to do. Yeah. Especially if you want to force it, like we're seeing here. So that's a really broad answer, because it really depends on what you want to do and what you're getting into. There's some out there that are specifically designed for medical data, for example, medical records and so forth. And the blockchain that they support is designed specifically for that purpose. But it all comes down to the architecture choices and design choices. You don't want to invest in a technology, for example, that takes an entire data structure or a document and forces it into the ledger or the blockchain, because then you're going to end up with an exploded ledger and things are going to be huge and it's just not maintainable.
It's a pretty common problem,
So what you have to do is you have to pay attention to what you wanted to achieve and what's not only best out there to fit it, but how they've designed the ecosystem.
So you've been walking around down on the exhibitors floor here?
Yeah.
And without naming names, like what's your impression? Like, are you impressed with what you see? Are you a little bit scared?
It's interesting. It's a mix. So there are a few diamonds out there, projects that are specifically trying to solve an issue and have a good technological stack, vision, and team behind them. However, there's also a lot of people that are out there trying to advocate for ideas and concepts, shovel-ready ICO pitches under the guise of we will provide you all of the material needed in order to do this, when in reality my feeling is that they're just trying to get the upper jump on the concept, get first mover advantage, and then you end up shafted at the end of the day, like with the traditional investment industry.
Yeah, exactly.
And then there's also the lawyers and stuff that are here that are trying to monopolize on the same opportunities when they have less than a year in the market. It is a new market, that's true. But there's a lot of sharks out there trying to take advantage of people. And I think there's more sharks than there are actual engineers here.
Right. And I guess
that's my personal opinion, though.
No,
so
I totally agree. And I think that's probably where you guys step in, right? To show who's the shark and who's the dolphin. Is that right?
Well, we're grounded in reality. I mean, anytime we sign on to an idea or even give a pitch, we know 100% that we can implement this ourselves if we need to, with or without a funding mechanism. Because what we find is that when you develop a concept with the funding mechanism first and focus on the funding mechanisms first, it really dilutes the overall concept, and at the end of the day, it's just a solution that's not scalable or maintainable. Coming from a traditional industry, I mean, you're used to bootstrapping things, you're used to having a low possibility of investment, so you're a lot more creative, you're a lot more, design friendly, and you take your experience, and it's a whole different vision.
It totally is. Yeah, I've seen too many companies who they do the ICO, they raise the funds, and then they say, "Oh, now what are we going to do?"
Yeah,
we have to actually build something now.
That's right,
and that's where a lot of them stumble too.
And they have the money, but then it's not a solvent company, so they end up burning through the money very quickly. It's kind of the same thing of in Silicon Valley, the companies that raise, the more money a company raises, the faster they burn through it.
Exactly.
And I think that the ICO market's suffering from the same effect, because in Silicon Valley you have a few companies that end up raising that amount of money to where they burn through the funds faster than they can develop their actual solution or maintain it in the long run. Whereas what ICOs did was it opened it up to a worldwide scale. And then you have the smaller companies like Radius and some of the other companies out there that, we build things up from our own money, our own foundation, and we have to get every single penny that we put into this thing, we have to get a value out of it. And I think that's a vision that comes from the traditional market that hasn't quite hit this new phenomenon.
Right.
It will eventually once the money dries up. you know. But I don't think it's there yet.
On that note, I think we'll call it a day.
Yeah.
This is Christopher Kaelin of Radius Data Systems. Where can people find out more about that?
RadiusDataSystems.com.
Very easy. Okay, signing off. This is Jon Southurst, Bitsonline.com. See you next time.